Post EIP 1559 with the burn. NFTs, I know a lot of people are asking about NFTs. What's the effect of that on the network, and how do we scale those solutions? So thanks and welcome, Alan. How are you doing this evening?
Yeah, good. Interesting mix of time zones we have. 9 p.m. here in northeast of China, and yeah, so I think we'll see how we go this evening. First time streaming this late in the evening here. We're very early in this part of China because the daylight goes pretty quick, so people tend to get up really early right over on the east. So here we are. Good morning. See a few people in the.
Yeah, I'm dropping on Telegram. I forgot to update that on Telegram, so we'll get them in here. But yeah, so I think the one thing, Alan, that when we talk about Ethereum, obviously you keep up with the space closely, and I know there's a lot of people asking on Twitter, especially, and things about NFTs, and you see all the hype around NFTs, and it's obviously you see some crazy, EIP 1559 try to normalize the gas fees, but we still see, there's still a lot of load on the base layer of the network. So, what are kind of your thoughts about the current state of Ethereum, and what we can kind of expect with, as things develop? Do we anticipate people are going to be moving more to layer twos and start moving these functions like NFTs onto layer twos, or what do you expect?
Yeah, I think what we've seen is 1559 dropped around the same time we saw a NFT mania kind of take off. So it's created this almost like distorted picture that 1559 has been responsible for certain things in the gas, which isn't the case. We've had enormous demand suddenly for layer one block space again. There's been various other mania times. We've had DeFi summer last year where we saw colossal amounts of DeFi transactions and all on layer one at that time. And now we're seeing these NFT drops where there are hundreds, at times thousands of collectibles, and people are in auctions, and there's so many transactions being sent all around the same time that it's creating these huge spikes in gas. Now if these things are really expensive, then the gas is still a relative fee to pay. But clearly, if the NFT is not that valuable and it maybe drops at the wrong moment, then you can end up paying more in gas than the NFT is actually worth, and that's not useful to anybody. So I think we're just seeing a repeat of it's like an episode of something you've seen before. we're watching, it's like we've been here before, and suddenly we've got all this demand on layer one. And I think what we're really going to see, and I think we're starting to see it now come through in the announcements, is the mainnet live releases of the layer two solutions are coming on Ethereum. And, we're seeing some of the big, gas guzzlers, if you like, on layer one opening up on layer two. And I think we're going to start to see a real movement of a lot of this core traffic over onto layer two solutions. But what's needed in layer two, and this is coming as well, is just simple wallet integration to make it easy to get your funds where you need them. Because, if you've got to go into different websites all the time and do different things with your MetaMask or your hardware wallet to move this from this side chain to this one, and it's not very user friendly. Whereas what we're now seeing is finally this layer twos are getting integrated into many of the wallets, and then at this point, the exchanges they're coming as well, in terms of you can, buy ETH and actually drop it straight onto a layer two from an exchange. The whole thing's going to change massively in the near future. We're going to see this user experience clean up, and then it's just going to be like moving your funds from maybe one exchange to another. You just press a button and it moves, and you've got your funds where you need them in an L2 world where you can bounce between the L2s. And at that point, things like NFT drops it'll just be automatic for the likes of OpenSea and others to be working on layer two instead of layer one.
Right.
And then really the problem goes away. And I think It obviously is just it's just really a case of timing at the moment. We've seen that perhaps this is the way it is. You've got the development on the layer one going on at a certain pace with a certain roadmap, and obviously everybody else is doing their things at their pace in their way, and not everything lines up. Just the way it's been. So
I'm going to interrupt you there, Alan. So great background. Thanks for that so far. I totally messed up our start to our live stream by not having my intro music and stuff and letting people get on here. But I had a question, and before you get too far, I think is it Rocky? Am I pronouncing that right? I hope so. Asked about some background on you, Alan. So I've had Alan on a couple of times, but I'm just going to interrupt Alan right there just for a second to kind of reintroduce himself. If we have people on here that haven't got to know Alan. Alan, do you mind just giving us maybe a couple minute background on yourself and what got you interested in this space to begin with?
For sure. So Alan, I live in China at the moment, so slightly crazy for lots of people at the moment, perhaps to comprehend moving to China in the middle of the pandemic. But yeah, I'm here with my wife, family, loving it here. Actually, it's been an amazing experience for the last few months. My background's in technology, as will be no surprise probably from talking about crypto. So I've been a software developer since the age of 10. Worked my way up in my professional career, spent many years as an IT director and CTO, building lots of things from crazy software doing bank statement printing and all sorts of crazy stuff like that, through to computer games and more recently in the e-commerce world, outsourcing government contracts, moving lots of data around. And yeah, I've been taking a bit of a break and actually sort of stumbled across CTM and have been involved there now, for well over a year, involved in investing. It's what I was going to do anyway in my gap. And then a sort of pandemic came along and all sorts of chaos and a market crash and all this stuff sort of lined up. And it's been sort of extraordinary really to be in a position to take advantage of that to at least some degree as a fairly newbie sort of trader and investor, looking at it more seriously. It's been an amazing sort of 18 months or so, and then hopefully I can bring a bit of that technical experience to bear on how I look at the things we're investing in. Ethereum's big for me, but I hold Bitcoin as well and other things. Me, I'm not a single coiner at all. But I am a little cautious as an investor. So, I'm into trading things that are in hype. I'm certainly not into holding them. I very much don't want to be a bag holder if these things pump and dump. I've been there in the stock market. Things go up and they come down 95% and thinking, oh, that's good then. Yeah. We've probably all been there. So, sure. So a little bit about me anyway. And
it's been an interesting experience, hasn't it? So, and Alan, I'll say the thing about Alan is he's got a tech background. So Alan and I both have tech backgrounds. I'm more on the infrastructure side. Alan's more kind of probably application coding centric, but he's got a breadth of experience in the infrastructure side as well. So you take the two of us that have different angles and perspectives of the technology space, and then now we're both learning rapidly about crypto. In the last couple of years, we've really been both diving into cryptocurrencies and this whole market. On top of that, we were both interested in investing and finance and started learning to trade. And you mix all that together, and it's just a fascinating blend of it gives us something really interesting to do with our time, our free times between cryptocurrencies and learning the technology and the trading. But Alan has become a rather adept trader, and especially he's very long term. So Alan, what I appreciate about Alan is he thinks very seriously about the growth potential and the macro, the overall situation of a company or a project, and thinks very deeply about where it's headed, and has been very accurate in kind of thinking through real world, and he sees real world adoption and he focuses on real world adoption and growth, and then he marries that with some really strong technical analysis. And again, Alan's a little bit more long term, but Alan's charts are beautiful. I think he's probably has an eye for some of the detail in the charting that many of us don't maybe see some of the things that he sees. So it's also super valuable having Alan's charts now that he's become proficient with learning CTM like I have on charting. His charts are really a work of art as well. So really, we definitely appreciate Alan coming on here and giving us some information as to what's going on. So Alan, I don't know if you want to get into some charts before we continue talking about NFTs and OpenSea and the effect of the network. I know you said,
good idea to have a quick look at the state of the market, if you like. I think.
Yeah, let's start with that. Let's get a quick read on the pulse of the market.
You'll need to allow me to screen share, because it's saying I can't. So hopefully you can. A bit of live stream.
All right, now it should be all. Now, can you screen share now? Sorry, we should have tested this before we went live.
That's all right, man. It's the joy of being live. You have to have some chaos.
All right, try that now. There we go. Let me see how that looks in the live stream, but it looks good on my screen. I got a nice screen share with your charts.
Excellent. So hopefully you can see the Ethereum chart here. Let's flip back and start. Let's do Jordan style. We'll go with Bitcoin.
Sounds good.
And start where we are with Bitcoin, because obviously Bitcoin's been attempting today to get through this 50,000 resistance. So my very quick sort of summary of where we are with Bitcoin. Obviously we've had this big sell-off and we sort of caught the bottom of these trend lines I've had for a long time on the chart. And then we've resumed up.
Do those trend lines go back to 2017?
Yeah, they go. If we weekly this out and go back.
I started using those same trend lines as well. Yeah, perfect. Look at that.
They catch the top and the next top there. Yeah, and this baseline obviously is a bit of a CTM line. We've all been looking at this. Take this sort of COVID crash out and just keep the sort of momentum of the market, if you like, and. I've just left these in, and they've lined up pretty beautifully with where it found support after that huge correction. In hindsight, it looks like a blow off top and then a resumption up. Hindsight's always the easiest way to trade anything. But yeah, obviously at the time, all a bit crazy. So we go back in here as to where we are on the daily. I'm not looking really down on the 8 hour very much at the moment. I'm just keeping an eye on these weekly levels and this daily movement. We've had this lovely we came back, we broke out of 38, which I was watching this weekly, came back with a perfect retest and resumption out of there, got through this trend line. And then as I thought we would, we've hit 49 where we've got the base of all this over here, this previous, where it was trying to make a high and failed, and that's acted as resistance, but obviously we're now trying to get through there. And then I think we've got a whole load of weeklies up in here. I haven't got them all listed on this chart, but there's a lot of weekly closes up in this red area, so I can see Bitcoin having a bit of trouble getting through there, so it may take a while. I think we might see again, it may go up and come back down towards 49 before it makes its way through. So it looks bullish. Looks bullish, and obviously it's had a bit of a rest here whilst Ethereum's been pumping, so it's kind of, and a lot of other things. So, yeah, looking bullish, just moving a little bit slower at the moment, I'd say, Bitcoin. So perhaps like me, as I'm getting older, it's moving a little slower, but still moving.
I think he might surprise us once he breaks through, but we'll see. Yeah, I kind of expect the same thing, Alan. That range you have, I'm looking at a similar range, and then the prior all-time high. So I'm looking at, I'm pretty heavily long right now on this retest, that 46.8 level, same exact level, that little touch right there. I went ahead and loaded up because I could have a tight stop under that lower wick just to the left, and we didn't close below it. And so I'm still in that real, because it's a tight stop loss, it's a very large trade. I will be looking to take profit at pretty much the exact same level. I was looking to see if we could break out of this little bit of consolidation we've had. And on that exact same range is exactly where I'm looking to take some profit off the table and then look to reload on the next, set of consolidation, the next setup, coming into 55 to about 60K. So that's really great. And of course, all this, I didn't do my usual introduction here, but remember everything that we share here is just Alan and I sharing our opinions, our thoughts on the market. We're not financial advisors, and it's our goal to help share with the community. That's what we're here for. We're here to share with the community, share our thoughts and opinions. And so please take this information and do your own analysis on it. Decide for yourself if this is valuable information for you to use, or if this doesn't fit it might not fit your trading style. We might be talking about too long of time frames, and you're trading really low time frames, or we might be talking about Ethereum and you're really focused on Bitcoin or vice versa, or another project, right? So just be sure to think about how this fits into what you do, and take the information we share and put it in your own analysis. But this is not meant to be trading signals or trading advice for anybody to take. Thank you. Sorry about that, Alan. I need to get that disclaimer.
That's all right. Listening to us, you ran by the river ready, because that's probably where we all end up. I think the thing with crypto, and we all learn, is you've got to do your own research. You've got to understand what your trading's about. It whipsaws all over the place. We've seen that already in this bull market. We've had almost like the mother of all corrections come down in the middle. The things are down 85%, in some of these projects. There's a lot of lessons in here, hopefully, for everyone who's been following it. Next time they're going to expect some of these things to happen and can learn from it, which is the most powerful thing. So obviously here, just looking at the detail here, we've got this sort of wick high on the 23rd here. Haven't quite taken that out yet, so it's getting close. Bitcoin, I think if we do, then we've got some noise over here, but I think we could run up to 55 pretty quickly if we get out of there and clear some stops. So that's looking pretty positive as a chart, just moving a little bit slower than many of the other things that I know probably you follow, Brandon, particularly. Obviously, I've been doing a lot of talking about Ethereum obviously in the look after the Ethereum channel a little bit in the CTM Discord, and obviously on Twitter. We've had a pretty crazy couple of days where it finally broke out of all this noise around this previous daily resistance. Then we've had this pump up and just got above this trend line, but no surprise to me, it's held up. But then it's actually come down and tested this daily, this sort of Heath line here that sits. We'll see if we get a resumption up. If we get another resumption up, then this could be full send. Where's this going? Who knows? That's the way this market seems to be at the moment. But if it holds up here again, it wouldn't surprise me a little bit. There's a weekly high here, 39.27.
Well, you see Bitcoin on the top of your chart there, up 2%, and Ethereum's consolidating. My expectation would be Bitcoin makes that move to that kind of that range we were talking about, while Ethereum consolidates under that. And then, I do definitely think a full send is probably after a little bit of consolidation here. I've been adding to my Ethereum position too, because I'm wondering what happens. I kind of think that when Bitcoin makes its move, there's a good chance that Ethereum might lag a little bit, but it might actually outperform. So there's just so much bullish for it. We'll just see. If Bitcoin makes a big move, there's a really good chance. I think, in my opinion, it'll lag a little bit, consolidate here, and then it's going to have a seriously full send because of the effects of EIP 1559. And I've just been watching all the ETH being burned, and it is unreal. But go ahead. Sorry, I just want to throw my 2 cents.
It's crazy if we hop over here to the ultra-sane money page. We're 168,000 ETH, and the more these NFTs keep getting, see OpenSea sits up here. It's mad. This is 24 hours. If we go to all, you can see OpenSea sits up at the top here.
Those of you who don't know about NFTs, OpenSea is what most people are using for the NFT
platform. Yeah, it's one of the biggest platforms. Certainly had the punks on there and the big collections. But burning 26,000 ETH. Crazy. So so we're burning a lot of ETH. 1559 is doing its job, and as we talked about last time, if you simulate the merge now, we're at a 1.5% deflation now on issuance. So this may come down. I think we've had quite an exceptional kind of crazy period of demand, but I think people have been saying Ethereum demand is going to drop for a long time. And of course, what happens is something else comes along. and hey presto, there's demand. So I think layer twos, it may be that layer twos are simply going to absorb enormous quantities of growth over the next year, and we're still going to have demand. But obviously, if you're not paying those fees, the fees are there for security and they're spread out across lots of smaller transactions. It doesn't matter so much. So
Yeah,
crazy. So ETH just looks bullish, and really it's playing out, if you like, as per a bit of a thesis. We've talked about it last year and continued it on this year, that ETH will outperform, and it's doing exactly that. In fact, it's outperforming Bitcoin pretty spectacularly in this bull run so far. We go back into last year, and what ratio were we at down here? I mean, you're down at 0.02. Down April, May, you're still at 0.25 here in the breakout. And then we've obviously come up, retested, come up and off a trend line here, and then boom, off we go. And we've now consolidated, made another triangle and another triangle, and we've come up here. And the question is, does the Bitcoiners narrative play out that this resets now? Or do we just get that false end? And if we do, then where are we going up here? All-time high, flippening, whatever, who knows, There's nothing to say this can't run up here. Unless, I love maxis and the confidence, but the market's going to decide, as we talked about last time. You've got to trade the chart to some degree with these things. If it's, Heath will do it, he'll trade anything. The chart says it's going up it goes.
Yeah, no, definitely trade the chart. I'll play the role of the BTC Maxi and say I don't know that a permanent. I can see definitely a big hype spike and it getting up there for a little bit. I don't see a permanent flipping happen just yet, but trade the chart. You're exactly right. And I've been saying that I thought Bitcoin dominance was going to break up. And it broke down out of its structure that it was in. And so guess what I started doing? I started trading into alts and taking advantage of the So this is the inverse. What Alan's got here is the inverse. This is basically, every other thing else dominance versus Bitcoin. And so that same pattern he was watching, I thought it was going to, break down for what would be his chart. And so I was holding a lot of Bitcoin. And then when it broke up here, that consolidation we just had, that's where you just trade the chart. It broke down. It broke up on
you. We had a breakout, retest, boom.
Yep. And so that's where you start. You just trade the chart, and this is where you have to get positioned in some
CTM on the, like, I think that's a weekly, that green line, right? Higher, high out of here, and it's
I do expect it to run into resistance and turn around a little bit at some point, and then
hit that daily perfect there when ETH stopped running.
Exactly, and it's crazy.
Will it get up here? Is probably the question of this run. Is there going to be a fundamental shift if ETH, and obviously there's other layer ones and other projects now that are the applications on Ethereum are coming with value. Are any of these going to start really developing so much value that Bitcoin just can't recover its dominance? I personally don't think that's a bad thing for crypto, because especially if these things have got usage in them, purpose, they've got income, that to me is like, now you've got some companies with some profit. They've not just got the top line, they've got some bottom line. We've actually got some substance to this market. It's not like we're not in the .com mania every 4 years, which is what it sort of almost felt like at times when you look back, because you look at the ICO mania and you couldn't find anything that had any sort of substance at all. It was even worse than 1999, and I'm old enough to remember the .com mania. I mean, they were pumping anything .com. It was crazy, and things had billions of valuation, had no sales, had no product, had no, and the Wolf of Wall Street sort of meme, if you like, that sits there about these things. Well, that's how it was, selling a penny stock where there's nothing, and so I think there's no reason why it's unhealthy if my inverse keeps going up here in line with whether the Ethereum chart or any of the others. I do, it's probably worth we've got another couple of minutes just to look at these charts. I do also, because I'm zoomed out, I sort of have these other versions of this which are based on weekly levels. Mm-hmm. So I tend to just keep these charts, and I just look at this version of my Bitcoin chart, for example. This one was a bit messy, but it did, when this capitulated, it came back into this range here, which I then had as a top and a bottom. And we sort of faked up, we faked down, and then we got the send, when it went. It never managed to actually get another weekly candle out of the range there. And we never got a resumption down there. This is where my infamous loaded tweet to Jordan about, well, when's a bull market dead? And then it took off immediately. It's kind of, it's been useful in just gauging the range of things and where it might run into resistance. Like we held up here on Bitcoin, well, no surprise at one of these ETH levels on a weekly. Mm-hmm. And you can even go out and look at the monthly. If you do, I think it was ETH BTC I was looking at just in the last few days, just looking at a monthly chart. And again, it's just, where's it catching? Where's it retesting? It's all coming off these levels. And this here, again, just looks, it's made this, it's resumed up here. If it clears here, that just looks like a send up there. So,
yep.
Yeah,
seen enough charts. So that was 2018. Yeah, so that's the peak from back from 2018. So it's looking like my intuition tells me you're going to get you got 3 lines right there. My intuition tells me you're going to consolidate in that area for a bit and then get your send, and which would line up if Bitcoin does break out here and make a move this next couple months. And you have a couple months, this is a monthly chart. A couple months of hanging out in that territory. And then early next year, you get a full send that looks something like what you have on the left there. That would not surprise me at all.
Yeah, I mean, we'll see. I mean, depends how long this bull market runs. There's lots of factors in this, but could there be a permanent adjustment in this ratio? I personally think there will be, but that's,
we have a question on the river. Core. So we got a couple of questions coming in here I want to relay to you. Yeah. So somebody asked what price is it on the resistance, and I'm not sure what chart they were talking about. We've been looking at ETH BTC charts, so these are more how many satoshis per Ethereum type of level. But if you could clarify what chart you're asking about, since it's a little bit delayed, the questions are a little bit delayed, and we're moving between charts. But we have you heard of something called ETH, Alan?
I don't. No, I'm not sure I have.
Okay, so Frank's asking about ETH, which is apparently a helps you earn ETH automatically just for holding ETH. I'll take a look at that one. And then the other question we had come in was Rashid asked, do you think ETH continues to make a new all-time high now or closer to the blow-off top similar to last bull run? So I answered my opinion on that. Let's get Alan's opinion on how long do you think it'll be until ETH makes its run to its all-time high? If you have an opinion on that,
there's an opinion to have. Personally, think it could come pretty soon. There's so much activity and burning going on. We've seen one of the, I don't think I've got it to hand, but there was one of the tweets I bookmarked was someone looked at when ETH levels on exchange got to this level, we had like an enormous explosion up last time. It's very, very low amounts historically on exchange now. So I mean, I mean, we speak with caution, Brandon, after our first stream, because Bitcoin capitulated shortly after when we said the chart looked bullish. So get your vans ready. But I think
exactly.
It does look bullish because there's substance behind the case for why ETH should take out that high. I was at a 10K, job done 20K target. Probably still stand by that, but I think, it looks ever more bullish at the moment. If you think where Bitcoin looks like it may go, ETH outperforms, that puts it, puts it up a long way, from here. Yeah.
I'm watching on-chain pretty close on Bitcoin, And on chain at these levels at 50K here, we're still getting coins coming off of exchange, more active wallet addresses, some of the key metrics that I continue to monitor. And we have an inflow. So we've got an inflow of money. We've got a very suppressed futures market, which is kind of neutral funding and prices moving up. So that's actually bullish, because what happens is when you break certain psychological levels, then the funding rate will go positive. And if Bitcoin, based on all that information, makes a move, you've got, on the other hand, you've got the EIP, the burn that we just looked at. I mean, Ethereum went from modestly inflationary to very minor inflationary, because the burn is still barely offsetting the new issuance, right? But he's got it here. So if you take off the merge, and so
we've dropped from 4 to 2.7 at the moment, which is a pretty significant, you could almost call it halving event.
That's a halving. So, exactly. Yeah. That's the equivalent of a halving right there. And so if you guys consider that Ethereum had the equivalent of a halving just, in the last month, and then Bitcoin. So if Bitcoin were to make a move, right, and it, based on everything we're seeing, it looks like it should. And Ethereum should outperform it. I agree. By the time it's all said and done. Now, as a matter of exactly when that happens, I don't know. But and then you look at, we just had a halving event on Ethereum with ETH being burned left and right. And then thirdly, I don't know when the merge is going to happen. Probably next year. So it's a different set of. So we may be a little bit late on that will lag a little bit, and then you'll see some. But there's a lot of factors that point to a really big move in Ethereum toward the end of the year or early next year. But if you go back to simulate merge, I want to explain what that is real fast. I don't know if you have any thoughts on it. But right now today, as you guys, I don't know if you're aware, but Ethereum is still a proof of work network, which means there are small miners like Alan and myself do Ethereum mining all over the world that use GPUs mostly to do proof of work mining for Ethereum. And we get paid to secure the network, right? And so we get a issuance paid out to the miners. And that's so even though ETH is burning right now, see all the burn that we've got going on, there's still more Ethereum being given out to miners than there is being burned. But because of the burning that's happening post EIP 1559, that percentage of growth of new coins coming into the market has slowed dramatically from 4% down to 2.7%. Now, when Alan clicks that simulate merge, what he's showing is Ethereum 2.0, which will move Ethereum from proof of work to proof of stake. And when you get rid of the proof of work component of it and you go to proof of stake, the issuance is a lot less. There's a lot less new issuance of coins on proof of stake. Yeah. Yes, it costs a lot less to secure the network and the payout. So you still get rewards for staking, but the payout is less than the current miner payout. So it will be, then this, in theory, we see here, it's modeled to cause Ethereum to become a deflationary asset, which Bitcoin is infinitely inflationary. At some point we will stop and we'll have roughly 21 million coins. But with the halving, it's actually a half-life. It's an event horizon you never reach. We basically just keep on halving, right, up until long past our lifetimes. So it will continue to be less inflationary every year, but slowly. As far as the inflationary, the term I'm using, inflationary, to define that means how many new coins are being added to the total available supply. But Ethereum is going to go the other way. It's going to become deflationary. It's going to start to have less available total supply than in the past, right? So that maybe is a next cycle. That's going to be really interesting to see when the quote unquote bear market comes. If we do get blow off tops later this year, early next year, whenever it happens, and if we do enter some sort of capitulation bear market, it's going to be very interesting to see after that capitulation happens, what happens to Ethereum versus Bitcoin in that phase, in my opinion, because when Ethereum goes 2.0 and goes deflationary, that's going to completely change the dynamic. And so we'll closely watch and see what happens with that dynamic. But that's fascinating to me. And Alan, welcome your thoughts on all that.
No, completely agree with that's a great description of what's happening here. I mean, and obviously nobody knows really a lot of crypto, you could say, is a giant experiment at times because it's all new and it's almost like you're running a beta version of everything. This is, Ethereum's playing out as per the roadmaps and a lot of the original writing by Vitalik and others is, born out in these developments. We will see. It's just hard to be bearish when you see deflation coming in the supply, and then you see this, OpenSea's come from nowhere. We look at, you can look at how much fees are being paid for what, 57 million in a day. Ethereum, that's like a record. I think it's just gone. The NFT drops are just killing this. This number was, I think it was 30 for quite a while, 20 to 30 when I was watching it. And if you look down here, I mean, you've got Ethereum, you've got Uniswap on Ethereum, and that's its fees for Uniswap's fees, not Ethereum's fees. That's Uniswap's fees. Obviously, a fork of Ethereum, you've got Aave, you've got Sushi, then you've got Bitcoin, then you've got Compound, etc., etc. You've got a lot of Ethereum on here.
Like almost everything there's Ethereum.
And then these numbers disappear down into. So if this is like your turnover for your company, you start to build some very, Uniswap's got a very small number of staff, and you look, they're doing 4 million in a day in fees. What an amazing business. And this I think is what's going to come out of here, is we've got some amazing companies at this sort of level on top of these networks like Ethereum. So but these numbers, obviously with Bitcoin, this is the fees being paid to send Bitcoin to somebody else, because that's basically what you can do on Bitcoin. And that's not being harsh. That's just the reality of Bitcoin. That's what it's built to do. Whereas this is obviously transactions to do all sorts of things, because it's smart contract, compute platform. So people are prepared to pay for the functionality, is what this is showing. And this number, it's skewed high because of NFTs. But it's a sort of crazy chart, this, as to, you disappear down into some very small numbers with everything else. Obviously other things are surviving on issuance at the moment. Maybe they're like a pre-revenue company if you're investing in a stock. So if you were doing some fundamentals analysis, you'd be looking at some of these other L1s and things that don't have much usage at the moment and say, okay, that's a pre-revenue business. And you trade the hype. That's typically the way all the traders will take those things. You've seen endless. We've got SPACs going on in the stock market. We've got all kinds of crazy stuff going on there, where people are effectively reverse engineering these non-IPO IPOs and just letting it pump and then dumping all their stock on people. And it's the same sort of patterns we've seen many times before. So this is really one of the only measures at the moment of actual sort of income for these sort of companies, if you view them as that at the moment. And it's probably a little bit, this chart's also interesting from Token Terminal, which is what they've called protocol revenue. And this is sort of revenue that's actually, you could almost say, is Ethereum as a business's revenue, which is being burned. So this is where they've turned on some actual income, if you like, if you could say, for Ethereum, that's returning money to the ETH holders now, because that burning is effectively shrinking the supply, and it's a return for you as an ETH holder.
Like a company buying back stocks.
Buy back stock, that kind of idea. So, so these guys who are viewing this as like a revenue, protocol revenue, are saying, well, actually, ETH now turned on some revenue. Whereas if you view like the Bitcoin one, it would sort of sit at sort of nothing again, if you like.
So we had a question here. I want to address this question. James asks, aren't ETH staking inflationary? They are using new coins to pay stake coins. So yes, James, staking itself will be inflationary because you're paying out stakeholders for locking up their stake to their coins to help secure the network. But when you look at how people are paying, when you execute a smart contract, you have to pay with GUI, you have to pay with fractions of Ethereum, you have to pay with some Ethereum basically to have that smart contract executed. And it's a security mechanism to prevent looping in the system. And those are being burned. And so, Alan, any other thoughts on that?
Yeah, so the burn is bigger than the issuance. That's basically what's happening. As demand goes up, and if it continues to go up for layer one, even if the purpose of the transaction changes over time, then the burn will exceed the issuance. So that's how you get the deflation. I think we're going to see other chains adopting this over time. I think obviously Bitcoin is an exception because they sort of want to lock the supply, and there'd be like World War go off in the Bitcoin community if anyone tried to change the rules there. but I think others will adopt this. And obviously, Ethereum wasn't the first, but it's the first major chain to have fee burn, and it's a powerful mechanism. So I hope that answers that question.
Yeah, thanks, Alan.
Obviously, we touched on layer 2, and we won't spend too much time on that. So we want to get a quick look at NFT in a minute, but Ethereum's layer 2 ecosystem is growing. So this was one of there's a few of these charts. I'm not always a fan of these because people miss out things but it just is designed to show how many different players there are now in this sort of infrastructure and, layer 2 scaling space. And there's a lot, we've talked about Polygon. You've talked about them a fair bit over time. They've been a great trade for sure. I mean, they've got a lot of usage. But in here, you've got a lot now of these full ZK rollup based scaling solutions. Now, in essence, all this is going to mean for a user is that you can transact on a layer 2 with almost no gas fee, near instant. So if you, for example, want to pay for something, then people talk about Bitcoin and Lightning and this and that. Well, very shortly, you're going to be able to pay very easily from a wallet just by simply probably scanning a barcode, just like I do every day here in China, where we've got, digital payments for almost everything. You just scan with a simple wallet application and it pays for something. Now you could be paying in USDC, you could be paying in whatever, but that transaction is going to take place on layer 2, not layer 1. So there is no gas fee with it. And it opens up this whole new world, because even things like, derivatives exchanges, things that have got huge amounts of transaction volume, all real time, can take place on these layer 2s. And perhaps the big difference with a layer 2 to trying to scale layer 1 is some of these have genuinely massive transaction throughput. And the cleverness that goes on in these ZK rollups is that you can put this mathematical proof onto the layer 1 and have full security inherited from the layer 1 that says, I know the state of the layer 2, so I know the balances, I know what's happening on layer 2 every so often. So you've still got full security despite all that extra speed. But what you haven't done is bloated the layer 1. So you haven't created this huge transaction throughput layer 1 like some of the other chains have, which brings you, I've talked about it before to some degree, there is no free lunch in scaling. As soon as you turn all this stuff up on layer 1, as some people like to talk about, remember Elon Musk asking questions about this, because it is the right question, but there is no simple answer to it. If you turn the transaction throughput right up on layer 1, you end up with a big fat node to start with, so loads of compute, loads of RAM, loads of storage, so it then starts centralizing immediately, because a lot of the players cannot afford to run a node at this point, or don't have the appetite to. And then you get all sorts of other issues to do with how do you resync a node when you've got so much data to pull suddenly off the network. Now you've probably got to put this thing in a data center with a great big wire in the back. There's so many other issues there that I think there's a lot going for this layer 2 design that I think isn't properly understood yet, and certainly isn't priced in yet when you look at the reality of scaling. I think when this lands, this is really this quarter probably, we're going to start seeing some explosive growth in layer 2 usage as these wallets come online and users realize that this is really easy. Actually, I just use the same wallet I was using before, and I just press a button and I can now not have to pay any gas when I'm using Uniswap. I think this is going to be huge for Ethereum. It's just going to make such a massive difference. And I think it's going to allow this next wave of users that are coming in these bull markets, because that's what happens. You get explosions in usage when all the headlines are out there. People come to have a look what's going on. I think it's going to support that explosion, within Ethereum. And it'll be good for the space, because once these technologies are proven, and if you look in this box, there's a whole raft of different ideas in here, different flavors of the scaling. We're going to actually see a little bit of a marketplace play out in front of us to see which technologies get adoption, which flavors of this scaling actually work best for all these different scenarios. And that's going to feed back into the rest of crypto as well, because everyone's going to be looking at this to say, okay, that works best. And if you've got a smart contracts platform, you can see then, okay, this is one way I can do scaling that's now proven. So, I don't want to spend forever in here, but the more I read this, I do spend a lot of time listening and reading, still do on this, the more I like this approach to it, albeit, you can accept at the moment it's perhaps a little messy from a user's perspective right now, with having to find how you get in and out of all these layer twos and which apps are live and which ones are not, and this and that. So as it tidies up, I see this being huge. And it actually brings into question the whole layer one sharding piece, which perhaps for another day, but I remember Vitalik saying, I think it was Vitalik or one of the other developers said something similar on one of the podcasts I was reading, as to, I'm not sure we'll be in such a rush to do sharding when we get the scaling in place. We'll just have to see, I guess, how much demand there still is on layer one. And that's because the ratio of what sharding can do is very different to what some of these layer twos are already showing they can do, in terms of how many times more transactions they can push through safely. And they're multiple, they're almost like shards in themselves at that point. So I hope that probably makes sense to you, Brandon. Hopefully it made sense to anyone else who's.
Yeah, I agree. It definitely made sense to me. This is a marketplace I'm watching very closely, right? And so obviously I talked about it last night on my live stream. So a lot of people ask me, well, why does your Ethereum seem low? Like the percentage of allocation I have for Ethereum? It's because what I'm starting to do is I have my core Ether, my long-term bag that I'm not going to sell, but I've diversified when I went back to add back, and after kind of the correction here, and instead of adding more core Ether, which I've added some Ether back to my portfolio from what I had sold, but I added Polygon and Loopring and some of these others, and so I have in synthetics, and so I have a basket of things now. That's so my percentage of investment. I've got a pretty decent sized Cardano bag that I'm still holding. If you add up my core Ether and all my Ether ecosystem of things, it's actually probably slightly larger than my Cardano exposure. But Bitcoin by far is the largest. But yeah, and that's to me, this is where all the growth is going to come from. And you said, and it should actually greatly suppress a lot of this utilization of the underlying blockchain, because it's going to take so much load off of it, which is, it's going to help, but it's going to move, a lot of that value to that layer two as well. So there's going to be a lot of basically new value coming to layer two, is from what I can see. Yeah.
So we can see, there's a headline here, Arbitrum got some funding, Starkware's just processed 10 million transactions, etc., etc. This is almost every day. My Twitter's full of some more announcements on layer two solutions, because there's so many of them now, and they're getting traction. But yeah, it's whether it takes the pressure off, or more likely, I think at the moment, it starts absorbing all this extra traffic. If we just look at how much transaction throughput there is, say, on Binance, completely centralized, ETH clone, it just shows there's so much demand out there for using some of these sort of technologies for swapping and such like. But I still think there's value in things staying in one ecosystem. We've seen some bridges hacked. We've seen some other things again going on. Bridging for me is a security mare. If you were trying to secure, it was like the worst thing you can try and do from a security perspective is bridge loads of blockchains together and have all the code running in your system with it, all those entry points. Sort of almost like the centralized exchange nightmare. So I think there's value in this in so many ways. So, again, as I've said before, the market's going to decide, but I'm bullish with this, particularly bullish. And we will see. We talk about NFTs. We will see NFTs start to come on these layer twos. Obviously, there's some on Polygon, particularly relating to Ethereum, but I think we're going to see a move so that the primary space for some of these NFTs switches to a layer two.
Yeah, no, I think that's a big potential change, right? Yeah, that's you're going to get the NFT market. Those are what markets will eventually move off of the core chain and onto side chains or to layer 2 scaling of some type. But as you said, I had somebody ping me a DM and say, the context of the conversation was, I think, around Elrond specifically, and it's
Sure.
kind of infinitely scalable layer 1. And the context of the question was, don't you think that having one network with an easier user interface is going to be better for users than this kind of what you described already as this really convoluted, how do you go from the layer 1 to the scaling solution and back or whatever? And my comment was, look, I think, from an Ethereum perspective, the layer 2 is where a lot of new users coming into the space are going to actually start gravitating to just being all layer 2. And they're going to start buying people are getting interested in NFTs now as this continues to grow. And I don't think NFTs are going anywhere. I think they'll eventually evolve from people buying JPEGs into more complex, maybe items. People focus more on in items or virtual land or something like that, right? In-game items, things that you can actually do something with other than a JPEG. But that's where it's starting right now, is this whole JPEG craze. It's kind of started it. I think that a lot of new users are going to onboard into some layer 2 network. They're not even going to know it's a layer 2 network. They're just going to use to have an interface to buy and sell whatever it is that they're selling. It's maybe in-game video game items, or it's virtual land or something like that, right? And they'll just be plugging in via whatever interface. They're actually going to be on a layer 2 most likely, and it'll be transparent to the users. And if a user starts with, that's their first exposure to it, and they're only on layer 2, and they never even think about moving their stuff over back and forth. That's how, that's what's going to cause the explosion in growth. And if you stay on layer 2 and you never really even think about the layer 1, which is probably where this is going, then it doesn't matter if your layer 1 is infinitely scalable, as long as your layer 2 that you're using is also similarly scalable. And so I do that's to me the really interesting piece is, the dark horse in all of this are Matic is kind of the leader in layer 2 scaling right now, I would say, obviously on Ethereum. And Loopring, you and I both use, we're interested and we use Loopring as an exchange. So I use it, I use Loopring the exchange. So for me, I have got some investment in Loopring because I use it instead of Uniswap, I'm using Loopring. Between those two, I can see a world where Matic becomes this Uber layer 2 network that has, multiple flavors of layer 2 abstraction, and maybe even not only connects to Ether, but over time actually has access to multiple blockchains to where, for certain types of transactions, it may use, for certain types of applications, really probably application specific, it may use a different blockchain than Ethereum because of some efficiency that another layer 1 has over core Ethereum for something.
We'll see over time how this plays out. So just obviously looking at OpenSea as perhaps the leading NFT marketplace, you can see this graph. It's crazy. It's sort of, we were talking about NFTs, I think, back here in Telegram days, in looking at it in CTM, and then it sort of bumbled along here, and we had punks and we had this and that, and you thought, okay, probably missed that, and then boom, it's just gone absolutely mad, and it's up way off the top of here now. And it's in essence, for people who don't really get it, it's just collectibles. So it's whether it's football player stickers or whatever, anything that's rare that there's demand for, that somebody wants, whether it's an antique, an old car or whatever, there's value in it. And we're seeing that here. We're just seeing it play out. You've got huge demand suddenly, not a lot of supply, and hence prices going crazy. And they're simply collectibles. Now, where does this go over time? As you said, I don't think it's just JPEGs. I've got a news item here we can look at, but I think this will morph into the proof of ownership for physical things, real things, houses being obvious, real estate being a very obvious place. The size of the transactions, for example, I don't think gas is going to be a problem when it comes to exchanging your house for your neighbor. It's all about security and sort of proof. You're selling your property, and it goes through, and you've got this digital proof of ownership. You've got a very significant use case there, and I can see a whole world out there of sort of almost like legal services right now, and all this proof that goes on. All these things are often filed on pieces of paper in some sort of government facility to to prove who owns what, stamped by a court or something and put away somewhere, can be digitized. And this space is potentially huge for that. And you can see that perhaps the mix of some things doesn't matter if you're on layer 1, some things are inherently better layer 2. And as you say, I think with the wallets and the platform, if the button says send to OpenSea, you're not really going to care too much, in the end. If you're already in the layer 2 world, you've got layer 2 bridges and it just happens and it's not costing anything. So, huge change coming. We talked about Loopring. There was their announcements of NFTs on layer 2. I have to say I haven't looked at it too closely. Clearly, you're going to be able to mint things and do all the things you do with NFTs on Loopring. So well done to them, and just hope they get some volume. We're seeing NFTs on some of the other chains outside of Ethereum. It's great if you want a $1 NFT, but the action's sat in places like OpenSea mostly at the moment in terms of big value. Hundreds of ETH. This thing's selling for 1,500 ETH on some of these things. It's just like
it's crazy.
Bought for 1 ETH. Half an ETH or something, So
I think the lesson learned here is that if you see a trend in crypto and you think you might have missed it because it goes up 3x or 5x in price and things start to move, you're probably really, really early because it's about to 100x or 1,000x. That's probably
you get used to trading stocks and they go up 10x and they come down and you've missed it. That's not crypto, unfortunately.
Yeah, right. Exactly.
And it was, to be fair, some people I follow in the Ethereum space had called it when the punks came along. Probably should have bought a few of those. When you look back, that would have been that. But it's another, as a fairly new trader and investor, that's the lessons you see as you start to work out, as Jordan puts it in CTM, who's right. So start listening to the people who were right, who was calling the trend. Okay. So I'm thinking, okay, well, you and you called some trend there. I'll be keeping an eye on your Twitter feed in the future if some other thing's coming along, because, it's probably worth dabbling a little chunk of your portfolio somewhere near that. So I bookmarked this just quickly in the NFT space is interesting, which is to do with a prediction of a massive more users is GameStop looking at an NFT development. So platform here, collectibles, etc., in-game, etc. I sort of highlighted this particular part of this big old thread that describes what's going on, just because I actually have come across some of these people. They're proper serious Ethereum sort of developers who've built, Matthew Feinstein was I think was involved in Loopring, etc. So they're taking that seriously and look like they're going to be launching something pretty major to do with, all the in-game players, etc. I think we're going to start seeing some of this stuff become almost like cross-game, if you call it that. It becomes a marketplace that's not, at the moment, a lot of things are tied into one particular game or one particular family of games, if you like. You're going to be able to buy and sell things and transfer things across this ecosystem, almost like in the real world. That's, again, potentially a huge space because, online gaming is huge. So very interesting, interesting development. And obviously an interesting company to be involved in that, because obviously they got tangled up in all kinds of stock involved in the shenanigans that were going on in the traditional finance world. So
no joke.
So sort of just noticeable. So well, I hope some of that was useful to somebody, as ever.
Yeah, no, I'm certain it will be, and we'll be able to continue to monitor this space and what's going on here. But I do think that I do. The one takeaway I have is I do continue to do research and all these other projects and everything else. I think people get a little bit too enthusiastic about just because especially a layer one technology is better, or will they perceive it as better or whatever? Just because it seems doesn't mean that the other guys that are like Ethereum especially haven't thought about the things that others are doing, right? They haven't thought about doing, but they have their solution for how to solve these problems. And long ago, Ethereum has always talked about scaling through layer twos. And that's before I think they really even ever thought about doing proof of stake, which is going to help them be more efficient at that base layer. And to your point, there may come a world where they say, you know what, let's not shard the base ledger. Let's just stick with the proof of stake, base ledger. Let's continue to improve the base ledger to where it's a single, blockchain, single, layer base ledger, and just make it really with proof of stake. It'll be more efficient transactions and things going on. And if enough people move to layer two, they may not have to actually shard the base ledger and bring in that extra complexity, because it is going to be, it's going to be a more reliable base layer if you can stay on a single solid base layer and not have to break up that ledger.
But there's a Bitcoin argument, isn't there, in there that you keep it simple, you keep it solid, and you don't make it overly complex. And you can put layers in place to deliver these things. You don't have to do everything in the layer one. And as you say, I've seen that argument almost like as a sales pitch, and it always sort of makes me laugh reading Michael Saylor's things, because, great guy for crypto in terms of he's plugging crypto all day long. But he sells enterprise solutions to people, and I can tell when I read some of his stuff, because it's sort of, I was like laugh out loud when I read it, 'cause it's just like, man, are you overplaying the benefit of that thing there? Just classic enterprise sales sell, which you probably get all day long in your professional career, as I've had a long time. You read these leaflets and sort of put them in the shredder. It's just like, what's that? You can cut through the hype. And I think there's quite a lot of that goes on in crypto, where people are really selling stock rather than selling any great technology. And if you're a trader, and I've said this all the way through, whatever it is, whether you believe in all these other chains from Cardano to right back in EOS and all these other things we saw in these past cycles, whether you believe in these or not, you can trade them as a trader, because the hype in crypto is amazing. It'll pump from 0.001 to $3. Well, retire, trade it. Don't hide away because technically it drives you mad because you think that's all hype. Trade it. I would just say to people, don't try and justify your trade off a bunch of fundamentals that don't make any sense, because that's not going to get you anywhere. Just trade these things when they're pre-revenue and they're new for what they are. Don't get caught up in them. Don't be a bag holder when it does come down 90% because it hasn't delivered something.
And that's it. And that's going to be really sage advice in the coming months, potentially. If we do get a really strong crypto, end of the year, bull run in crypto, there's going to be so many things that people joining us from this point forward, if they don't take some profits, they may end up capitulating at lower prices than even they're buying today, right? And so, and some of these things now, I don't, if Ethereum, if it were to go on at 10 or 20,000, I don't think it's coming back below 3 or 4,000. If it does, it's a quick capitulation. It's not going to be there for long. But nonetheless, I think this is why I think it's really important, if you're going to be in the crypto space, to at least understand a little bit about trading, and maybe at a very long term or investor level, but knowing when something is moving up unsustainably fast, and that it's going to reverse, and then there's going to be a capitulation period too, where people, you have a sea of people who, regret their purchases and then have to sell at a loss. And that's a tough place to be. So we should be right now, I think we're in a good place, because we're still kind of like, we're still consolidating after a bit of a recovery, and it's still a good time to definitely be getting into the space. But you have to be cognizant that you can't be overly euphoric. If you have something that goes 10x or 20x in the next few months, don't expect it to go 100x. But if it's moving up unsustainably,
profit is a trading rule. I mean, I've made that mistake over this year. If I'm trying to trade it, you take some profit, maybe don't take all of it and all the rest of it. It also did for people, it's if you've made a 5x or a 10x on a trade, even if the thing then goes to 20x, you've still made an amazing trade. Don't kill yourself over it. It's You know, there's a lot of people out there still selling 11%, 7%, 5% a year investment funds.
Yeah.
Crypto is an extraordinary place to be able to trade.
Yeah,
You know,
absolutely.
so get a few basic skills, and you know, it really can change your life completely. It's you know, it's a crazy place. But you know, if you don't know what you're doing, you start FOMOing in crypto. Goodness me, you know that downside. You know, I still think we get a bear market here, and we've just seen a Bitcoin 55%, everything else 80. So you know, Ethereum 60, and then we've had 80s almost all over the place. You know, these spike downs. You're still going to get, if we get a proper bear market, a lot of these, you know, outside of Bitcoin and Ethereum, what are you looking at? 90s, 95s? That's what we've seen in the previous ones. You know, we've seen some stuff 99% off, you know, it's like a sale, 99% off, you know, so you don't want to be holding the bag. You've got to get out of those things. You have some trading method that gets you out of stuff, you know. You did it with Cardano, and I saw you getting frustrated at somebody querying your signal calling on Twitter, but it's not the point. If you haven't got a trading method, is the point. You've got to know to sell that thing when it runs out of momentum. If you're taking a momentum trade, or did people not think they were in a momentum trade? I don't know. You know,
right.
So they know what they're trading and why. So
for sure, and that's why we do this. Is so you and I mean, being technologists, we're trying to help just give our perspective on the technology, what's real, what's hype, you know, and so that's where I try to add value. But the other part of it is, as traders, we're giving our kind of our general opinion, and you know, and hopefully people can find value. But you know, I'm not here to be a signal service, and I don't think you are either. Trying to be on Twitter, we're just trying to be here sharing our observations. And it's really, really important that if you're going to be in the space, you develop your own skills, your own ability to at least understand the general moves of the market. Because the last thing I want people to do is, you know, go take it when the FOMO hits here in a couple of months. People taking out loans, using credit cards to buy things, whatever, that's going to happen. It's going to happen, and people probably listening to us today are going to be tempted to do it. But that's the main thing.
Taking loans, you probably wanted to be doing that when Bitcoin was 8,000, not now. You know, it's not the right place to be.
Right, and so you know, I think that's if I can continue to add that warning out there, is like, you know, if we can have a level head about, you know, when the market moves up parabolically, it is time to start taking profits or hedging, whatever. If you really just love whatever asset, say you're got Ethereum and you don't want to let go of it, there's you know, there's the futures market. You can do a little bit of hedging if that's the way you want to play it. It looks like you're getting a CTM signal right now on Ethereum. You want to explain what that is?
Just noticed it spiked down 1.5% and straight back up. So Bitcoin's moving slightly, but if we get the higher high on the 8 hour, then there's a CTM entry. Stop loss below that daily there. You know, you could take a trade on that. Whether I would, don't know, with 39.27 hovering there, because it's probably risk rewards not great as a
you're getting at this point. It'd be a little bit less than a 1-to-1, but it's about a 90% chance of working out. So I would take it if I was like in front of my computer with a quick scalp. I would absolutely put an order in at 38.50 and take profit at 39.20. But that would be a quick step, because the odds of it dinging that are like 90%. So that's worth it if it's even less than a 1-to-1. But you have to do the you know, the risk reward on that.
You'd want Bitcoin to take out this high, and then
it's going to make a move once it takes out that high. I kind of expected it to kind of get an initial rejection once it dings that myself, and then test 49.106 one more time and then up. But Bitcoin does Bitcoin has no rules, and it can do, crypto in general has no rules and do whatever it wants. You know, that's just an assumption on my part as to what it might do.
Probably the other thing I would say as a rule for me, because I don't speak too much about trading on these streams, is I'm still in this breakout retest resumption school. I would prefer to take a safe trade. I think if there's one lesson from CTM, I know Jordan has said you can take breakouts in crypto, of course, because sometimes you'll be left there at the bus stop and there's no more buses come in. And that's, you know, that's what's happened. But a lot of the time I've been watching these charts, even on the daily chart, when I'm now looking at those weeklies, as I said, when we got above 38, hey presto, we came back in, we tested it, and then off we went. So I loaded back up on some Bitcoin at the resumption off 38. It was just, for me, it was the right entry. Looking at the chart, we'd had a rejection off a trend line. We'd come back in and, lovely retest. See it down here. Lovely off the weekly. I mean, if you put the daily on, it's much.
I've started adopting
perfect on the daily. We got an entry here gone.
I've definitely started. I do more of a hybrid now, Heath style, where you buy. You map out your supports. You buy coming into support with a really tight stop, and then you also take the resumption. So I have I'll have multiple entries, and I'll manage my stop losses accordingly. But I've been doing more of the Heath style, buying into support, probably more. But that's been maybe slightly more effective for me lately. But that's more effective when you're going sideways like this, right? When you're trying to catch moves in a range, that to me is a little bit more effective. But when you break out, the resumption signals are better to help you make sure that you're not going to get caught on a quick reversal. So the CTM signals on a breakout, but when there's either a big air gap between resistances or breakout to a new all-time high, that's the CTM signals I kind of prefer there. But the Heath style pulling, wait until a pullback into support is when you're trending sideways and you're trying to make smaller, moves. That's a lot more beneficial. We had a question though.
Heath looking at this, he'd be down on the 5 minutes trading this, just killing it off this.
Yeah,
I'd have a headache looking at the 5 minute.
I don't stare at I only pull up an exchange when I see something on a chart and I want to make a trade. I pull up the exchange, I put my orders in, and I close the exchange, and I just go off with my day.
That's right.
That's the way I do it. I don't stare at it. Jacob asked a question: with more transactions moving to layer 2, how will that affect the inflation deflation pressure with proof of stake in layer 1? So you want to take that one?
Yeah, I mean, I think because we've got growth in usage, I don't think we're going to see a big drop off in any sort of demand on layer 1. And in fact, I don't think many of these solutions like Uniswap are going to turn off their layer 1. I think they may attract more liquidity over time into the layer 2. I think layer 1 still serves a purpose, so I don't see demand going away there. I mean, if you're trading large amounts, the gas has never been a problem. The gas is a problem for typically for the smaller trader, or the smaller buyer of something on Ethereum. So it creates a lot of noise because obviously there's an awful lot of retail that are not in these, haven't got a big bag to trade. If you look at a lot of the transactions, this stuff goes through, big transactions go through. These are not, Ethereum's not just carrying trades where you and I have got a few ETH moving around on a trade. There's transactions going through with thousands of ETH in them. So layer 1 still very much has a purpose and a place. And if you can imagine an NFT, if it's for a house sale, it's still going to be on layer 1. I think there'll be a blend of the two still, so I don't see that being a problem.
That's a good perspective. You actually just taught me something. I did not even think about the really large transactions continuing to be on layer 1, but you're right. So there is definitely a market for that layer 1 space versus the layer 2. That hadn't really, that literally just struck a light bulb with me. Just wanted to share that.
You can argue you can still do that on layer 2, which you can. But there may be people, certainly the Bitcoiner argument again there is you do something on layer 1 maximum security, immutable transaction. I think there's a case for that. So you can see Bitcoin, just watching Bitcoin here struggling to get past this high. So we will see. It just sort of looks like it wants to pump, but it's just hanging around just underneath this high. So
yeah, I think it's moving. It's gonna break.
Bullish.
Yeah, it's gonna break a level here before too long and make a big impulse again, probably. Either that, one of two things is going to happen on these charts. Either this is a double top potentially, and we're going to get a real strong reversal, or but given the trend currently, we're going to break to the upside. And the reason this is where on chain and understanding the technical, of how the technologies work, the actual adoption going on, it helps color my bias, right? So as a pure trader, I could see a situation where this reverses on you, right coming into here.
Yep.
But what's going to shape my bias to the long side is I see on chain and I see there's a lot more buyers than there are sellers, and I can see that because it's a immutable public ledger, and I can see who's buying and who's selling more or less, right? I can see where coins are moving anyway, right? And it gives us a lot of ideas to what's going on, plus active addresses and these other metrics. So I know that unlike in the spring, coins were starting to be put on exchange, so it gave us all pause, and we were starting to wonder what was going on with that. Now coins are coming off exchange, active addresses are flying upwards. So, and this is across Ethereum too, right? Ethereum's got a really, really low liquid supply on exchanges right now. I don't know if you're pulling up that chart, but it's really getting sparse. So that's going to color my bias.
Yeah, I'm sat on Chinese internet, so that's not going to load. But yeah,
so it's getting really, really low on I've got it here. I can share. See here, core on chain for Ethereum. Where is my? Where it is, decentralized exchanges. Here we go. I can share my screen if you want for the people's. But yeah, the balance on exchanges is getting just.
Yeah, I mean, I was looking at the Ethereum tweet there, but it's the same thing. It's so low now. They're at levels where I think we had a massive explosion of like 10, 15, 20x or something from there before. And
yeah, we're getting down to
so low. So
we haven't been this low since basically the mega pump in January. It was a bit lower than this, obviously, with a really big move in February of 2018. But yeah, we are significantly down on balance on exchange from August to now. From last year, August 2020, in the past year, we've come just insanely off. It's been just almost straight down coins coming off of exchange on Ethereum.
So I see we have what are we? I'm just looking at the chat, so I flip back so I can see the chat. So,
oh, okay.
Yeah.
Talk about Cardano NFTs. Yeah, so there's a couple of projects on the Cardano ecosystem. I'm going to do it next week. So just to give you all a preview of next week, I'm going to do so I did a Twitter poll, and Cardano ecosystem is winning. So I'm going to do a deep dive I'm going to do a quick overview of the general Cardano ecosystem where we're at. And I'm going to just look at a few of the bigger projects that are coming, and we'll do a deep dive. And there's an NFT platform that we'll look at for sure. So I'll be sure to bring that one up. You've got the exchange, so the DEX, the NFT marketplace, and what was the other one I was thinking about talking about? But I've got a few queued up to talk about, and then we'll see after that. That's what I'll be getting ready for next week. Screen is still trading. That's fine. Unless y'all want me to share this. Go ahead, Alan.
Yeah, I would say. I mean, obviously Cardano is really early, so it's kind of it'd be, as we're seeing, there's obviously some people are pumping a lot of money from behind some of these other L1s in attempting to break out into this space. Very, very early. So, whether anyone can gain any serious adoption is always that, it's like you can, a good example is right outside my window here. In China, they can build these huge residential areas and then fill them up with people. It works that way round, and they don't have to worry about demand. They sit empty for a year. Nobody's bothered. Whereas most of the world, if you're back in the UK and you're a developer, you need to be able to sell those units pretty quickly. You can't be sitting around with an empty block. I think they have, it's an interesting thing in crypto as to how do you get real world usage. And I think all of these L1s that sit outside of Ethereum's ecosystem are either trying to be Ethereum compatible, which says something in itself, or are trying to buy usage, which historically has been a bit of a graveyard in crypto. You've got to actually put something that's better in front of users and give them a compelling reason to use it normally to get adoption. So, I'm not anti any of these other chains, but I am at times quite skeptical as to whether they're going to get anywhere, just because that graveyard's got a lot of graves in it.
Yeah, and that's a really good point. Is that I think there are people that are probably joining us this year for the first time. Maybe started last year. I think you and I were around in 14, 15, 16, 17, somewhere in there, right? I got really more serious about it in 16 probably. But that's the thing, is that we've seen, we've been through the EOSs and the Algorands and the graveyard of like Algorand's not really that's a viable project, but EOS and a bunch of other these that are now just ghost chains. And there were others that were really hyped, as Ethereum killers and
XRP.
XRP, yeah, and nothing ever happened with them. Yeah, and then you have your centralized XRP, and then in the spirit of XRP has risen Binance, BNB, and Solana. Really,
amazing trades if you catch them at the bottom and trade them up. But are they actually doing anything with meaningful revenue coming through and purpose, other than people sending the native token to each other? And the answer is sort of no. So it's, some of them have got big war chests. They're trying again. There's developers saying how much they're being offered in the Ethereum space, and obviously turning them down. It's curious. It's curious. It'd be curious to see. I'm certainly not naive enough in technology to think that the technology that's there today is always going to be there. Because goodness, if I go back to when I started off, goodness me, everything looks a bit different now. There's still the Microsofts are around, but there's an awful lot of names now that didn't exist at all back then. So things can change. Just to cover this quote quickly, maybe it's just something I bookmarked, and also I can't show it on the screen, but it said last time we were at levels for ETH on exchange with the balance moving down, the price was $88 in May 2017 and did a 16x over the next 8 months. So that was the quote.
Wow.
So an extraordinary sort of level of ETH on exchange. And when you think in 2017 the usage level on Ethereum was way lower than it is now, you have a lot of ICOs and sort of garbage going on Ethereum. You didn't have Uniswap and all this, DeFi work going on, exchanges happening, and NFTs and all these things that have got some economic value. Let's put it that way. So,
right. I think that's
crazy.
Right. That's the other take, is when you look at valuation metrics, right? So I kind of go on about this. How about Ethereum, Cardano, these others? They're bound by valuation metrics and their adoption. And obviously Ethereum has all the adoption. Nobody else really has any real adoption. So their valuation metrics very much favor actually, Ethereum. But and then investors pay for growth over time. So real investors, not just speculators, will pay for growth, right? If they can see a real path to growth. But this is what makes kind of Bitcoin unique, in my opinion, is that it's not necessarily bound to the valuation metrics as a reserve asset. And in theory, the better that Ethereum and the Ethereum's layer 2 ecosystem and some of these other Chainlink and maybe Ethereum competitors like Cardano, whatever, the better that they do, the better it should be for Bitcoin. That is, unless Ethereum maintains its absolute dominance in the space, and then it could flip Bitcoin. The flipping would happen if people started viewing Ethereum as the reserve asset for crypto and not Bitcoin. And if liquidity started to be tied to Ethereum, people were trading Ethereum pairs more than, say, Bitcoin pairs, for example. People were putting their, the core accounts into Ethereum instead of Bitcoin. That sort of behavior would be what would cause the flipping, and it would be less on the valuation metric side of how valuable is Ethereum and its chain, and more on it's simply that people are now viewing Ethereum as that reserve asset, and then that's where Bitcoin would fade off and Ethereum would flip it. But as long as people see Bitcoin as the reserve asset and the trading pairs and liquidity is all tied to Bitcoin, it will continue to appreciate as the value of the underlying cryptocurrency market rises, right? And so that's an interesting thing to keep an eye on. And then outside of crypto in the real world, is Bitcoin going to be used for adoption elsewhere, which will help keep its place as that reserve asset, which all the liquidity in crypto is tied to, which will then help solidify its valuation. Yeah. But on the next week on the Cardano ecosystem, to Alan's point, the reason I haven't talked much about many of the Cardano projects is I don't want to be too early, and I'm a post-hype type of person. So I never buy ICOs. I always wait till after the ICO, and I wait for the inevitable correction after the ICO to buy. Sometimes that works out in my favor, sometimes it doesn't, but it's just the way I do it, right? And so I'm a post type person. So I wait for all the hype to go away, and then I wait for realism to set in, and then I analyze, is there real adoption? And once the hype is gone, there's real adoption, I see real growth, then that's when I decide to invest, for the longer term. And the same will be true of the Cardano ecosystem. So we'll talk about a lot of the interesting projects, where they're at, where stages they're at. But until I will probably not be I'll be invested in my core Cardano because I'm interested in holding the core platform because I see real adoption potential there. But I don't know which of the projects on Cardano are going to be winners. So for myself, I will take a back seat. I'll wait for the hype to subside. And then maybe next year, if there's a bear market, that's when I'll be buying the Cardano, which ones are really still alive, which ones are, thriving, have really good utilization metrics. And then I will buy in probably, but that'll be a 2022 purchase. But next week it'll be my first time I'll start to talk about and just start to really evaluate the landscape. But that's why, having Alan on today, we're looking at real utilization on Ethereum, real world, adoption and all the different projects that are being built on it that are doing real things today. And so, this is why I have myself, I've got the polygons and Loopring and engine coin, things that are built on top of Ethereum, because that's where the real adoption is. And that's so anyway.
I think increasingly you might see a lot of the valuations with substance are going to be the layer above. They're going to be some of the protocols and then some of the sort of applications. So you're into that, you're not the wires in the road and the ISP or the Google or the guy with the application everybody's using, the social media platform or whatever. These things are built on top of the layers below. And there's some real decent looking businesses there in that Ethereum ecosystem now, and there's no reason why they can't be some elsewhere that would stand up on their own. Obviously they don't wanting to make anything sound like a stock, but they don't need to float on the traditional market, a lot of them, when they have their own token. But some of them are now becoming viable or are viable businesses in their own right, which is important for crypto long term. So just obviously conscious of the time, Brandon.
Yeah, I was about to say it's about time for us to wrap. We've been going on a little over an hour and a half, and you are probably exhausted. So I'm going to wrap it up here. Thanks again, Alan, for joining us. Let me just throw up your Twitter on the 20 ping. Did people get the chance to check out your Twitter here? And your video froze a bit ago. I was actually trying to fix that. So I'm going to share Alan's Twitter feed here. Here's Alan's Twitter. So follow Alan on Twitter, 20ping3. And check out his insights, obviously, in Ethereum. But we thank him so much for joining us today. Thank you, Alan, for being on and staying up late over there. And we'll look forward to the next chat.
Yeah, sure. I'll see if I can unfreeze myself. I'm not actually stuck in that position, so I'm okay. Well,
get some well-deserved rest, and we'll catch you on the next stream.
No, thanks, Brandon. Thanks everyone who's tuned in. So catch you next time. Cheers.